Okay, howdy everybody. So welcome to our seventh weekly Denver housing market update, coronavirus update, and looking forward to getting you guys lots of information, seeing your comments and all that stuff. Holy cannoli, do we have a lot of information, breaking stuff for you guys from this week. Lots of things going on, so stay tuned. We've got some really good projections and analysis coming from some nationally renowned real estate economists. We've got a real good look at what's going on. I mean, the Denver market, people are talking about, we're in like a rolling start. Well, I'll tell you what, once word got out that we're opening up, man, things just started taking off. So there's a lot of good news for people buying or people selling. And so we got super stuff coming up for you guys. There's a lot of misinformation that's out there right now, so we want to try to clear up a lot of those things. We'll be discussing some things that people kind of went on national TV and talked about, and we were just sitting there going like, "What are you talking about, man?" But at any rate, and so if you're watching live and you're watching from the Facebook or the Lincoln Real Estate Group livecast page, when you comment there, we'll get those fed live. We're monitoring, it's going out to 6 other feeds, so we're trying to monitor those comments. So if you can get your comments in there, we'll try to respond to you as they come in. Now, with all that, I think it's about time to bring in our all-star temperature-controlled panel with our trusted broker and chief temperature taker, Jen Erzinger, up on the left.
Good morning.
And our super financing guest expert, part of our panel, Pam Wandry of Columbine Mortgage. And then me and Ann, Jen's A team, broker associates here on the bottom where we hang out. Everybody's approved to be here. Our medical stuff has been checked, so we're all good. How's everybody
Google
doing?
Doc complete.
Google Doc is updated. Yeah, 97.2, baby. So, at any rate, so how's everybody doing this morning?
Good. How are you doing?
Just living the dream like everybody else, man. And, oops, hold on. I'm feeding. We don't want to do that. Got a little technical thing going on. Hang on. Oh, okay. Hold on. All right. What's happening is there's a delay on Facebook, and so it was feeding through. So sorry about that. So, at any rate, lots of great information came out this last week. We had a podcast from David Stevens last week that brought up a lot of details this morning, and we just posted this, and it'll be available on our website. The podcast interview with Brian Buffini and Dr. Yoon, who brought up some really good statistics that are really promising for a lot of people. But one of the things that was kind of consistent in a lot of what we're hearing is that there's a lot of misinformation, and I thought I'd just start with Brian had mentioned that one of these sports team moguls, his name starts with a Mark, I won't say his last name, but it was on national TV saying, well, if you're an escrow, you should cancel that and offer 30% less. And I just thought I'd poll our team and see what y'all thought about that.
Good luck. Good luck getting 30%. Yeah. I mean, what we're seeing right now, things really picked up this week. We opened up on the 27th. In spite of what county you're allowed to show in, things still got pretty crazy out there. So yeah, good luck getting a discount. Good luck. We've still seen some multiple offers. So going under is not really an option right now.
Well, and the thing is I think Dr. Yoon mentioned in his podcast this morning, he goes, so there's a lot of misinformation from people that don't really know real estate, right? That are just kind of like thinking we're trading widgets and stuff, and they don't understand the dynamics. And Dr. Yoon had mentioned, he goes, yeah, well, there's going to be a part of the market that's not going to listen and want to try to lowballing, and they're going to have a very difficult time trying to get a home, which we'll get into those things. But as far as on the national level, Dr. Yoon had also had some pretty good analysis that he did based on studies that he did, what happened in Katrina and what happened in the New York market after 9/11 or 9/11, and he predicted a 10% or 10 to 15% decline in activity, but matched with values still appreciating 1 or 2%. So, panel, what are you guys thinking about those kind of that kind of analysis there?
Well, I think part of what you're looking at and what they are talking about is national numbers. And if you take the national average, yes, you can come up with things like that. But real estate's also very localized. And I have yet to talk to an agent, even from other states, that says their market's down. They're experiencing really what Denver's experiencing. And we still have a 1% price increase or price growth over last year, which is really good for what we're going through in the last month and a half. We're strong.
And we only shut down, what, for 3 weeks? Is that how long our showings were officially cut off? So, we're back open again. And there are still markets out there who they're not allowing showings. And of course, you're going to get depressed. You go a month, 2 months without showings, 45 days, however long it's going to be, then you can't help but lose some market share and some activity.
Right.
So,
yes, but our activity is still strong. We are watching these numbers every week.
Well, and I think that's the key takeaway was that, there's such a pent up demand and still a housing scarcity, right? A housing shortage that, unlike other industries, housing is really well situated. And I thought that was interesting was that his I think we're saying we'll see this for our audience, we'll see this in our local numbers, but for the national scope, it's like, well, yeah, I mean, there is, as long as you've got the demand and you got financing fueling it, we're in good shape.
Well, and also builders have backed off too. I mean, we've been so tight on inventory, and they were kind of getting us, I won't say they were getting us caught up, but at least they were building and selling, and that's been pretty much cut off for the most part too. So that's just lagging us a little further behind from an inventory standpoint.
Yeah. Well, I know when we all started this and we were looking at the figures, that first week on our first podcast, we were like, this is going to go off a cliff, and for those who had tuned in, and thank you for joining us throughout the whole time, when we started seeing these numbers are still pushing up, it's like, what's going on here, man? Are these numbers right? I mean, this is, and even though our pendings are down from last year, the fact that we were closed is really surprising, and you'll see in a little bit when we rebound. But moving to that Dr. Stevens podcast, he brought up something where the number of households are increasing, where there might have been 3 or 4 millennials living in the basement, right? And they're all buying homes now. And some of the millennials are like thinking this is great to rent in my 700 square foot apartment, are suddenly, after being locked in it for a while,
cabin fever.
I got cabin fever. So let's pull the panel on your thoughts on that,
I think millennials are also at the point now where they can buy. I know might set them back, the younger millennials, but the older millennials are pushing 30 at this point. So, they're ready to go, and they're looking for stability. Rents are going to go crazy. Either it's going to be a little bit of a mess when we're coming out of this forbearance. And so, part of the strategy is going to be stabilization of your budget. And that's going to be huge for millennials, not to mention getting out of your 700 square foot box that you're in with 5 other roommates, but just trying to get your budget stabilized. It's going to be super important in the next couple of years.
Yeah, rock on, man. No, I think the whole millennial market just kind of delayed their home buying thing, and I think on top of the already intense demand, now it's like, okay, well, we've got a whole bunch of different dynamics coming into play. There was one thing, and this will probably be, but some of the when I had a few phone calls and like, where are these? People were bringing up, these claims of what's going to happen to the housing market. Like, where are they getting this information? And I went and looked it up, and I'm like, oh no, man. It's like, okay, somebody else that doesn't know anything about real estate, and they're coming up with an opinion, kind of like the Amazon reviews you'd see where somebody didn't buy the product and they just write what they think about it. I'm just like, okay, yeah, I'll get back to me when you know. But one of them was the fact that there's so many of these mortgages going into forbearance, and we'll get into more of this into the thing, but I thought, Pam, it's like, and the team, does the number of mortgages in forbearance, does that equal the number of foreclosures we're going to see? Or what are your thoughts on this?
No. One can obviously lead to the other, but and I'm sure Jen and Ann can talk to this more, but we're not in the same situation we were in 2008. And those people that are in foreclosure right now, it's going to still be, another year till they actually possibly have to even start paying.
Or you mean forbearance?
Forbearance, sorry,
yeah.
yes.
That's right.
And so the forbearance is there for, hardship to get them through this rough time, but there's so much equity in people's homes. We're not going to see the foreclosures that we saw, 12 years ago, 10 years ago.
Oh, that's my first thought too. It's like, why would you end up in foreclosure when you've got a market that things can't, if they're priced right and they're showing well, they aren't staying on the market,
Right.
Boom.
And, and if they get into that position where they do need to sell, they're going to be able to sell, not where there's, 20,000 homes on the market and not enough buyers. We're complete opposite right now.
Yeah.
Purchase contract or applications went up 12% last week for, mortgages. And so like you said earlier, demand is there. It's going to be a hot market and come back here very soon.
Yeah.
We're on the slingshot right now. It's coming.
No.
Plus, if there is any foreclosures that come out of this, we're not going to know for probably 12 to 16 months. Yeah. Most people can forbear their mortgage for the next 6 to 12 months. And then after that, the foreclosure process doesn't start for 4 months.
Yeah. Well, and one of the things is
early.
driving this too that came up in both of those podcasts and in a number of other, I'm going to say credible real estate blogs, not written by the newspaper's editorial staff. But one of them is that with the government spending, we're trillions of dollars coming to the money supply. The idea that we're going to be seeing inflationary times is looming, right? It's not here yet, but all of them have been saying, real estate is a hedge, or kind of keeps pace with inflation, and again, thrown to the panel. It's one of the reasons that it makes sense to get going now, right? Low interest rates, pending inflation might not happen. I think they said, Dr. Yoon said, might not be here for a couple of years, but I think that's a really good point. Yeah, what are you guys' thoughts on?
Well, just what you said. I mean, housing is a hedge against inflation, and it is coming. We can't print that much money.
Yeah.
And not have a rise in inflation. It's literally impossible.
Right.
But who you have to listen to are reputable economists. Especially in our industry, they have to be specific to the real estate and the mortgage industries, because then we can educate the public, not just by, like you said, just watching editorial. You can scare yourself into selling now, if you're listening to some of these people.
Well,
and
I think that's why it's important. And we keep, for our audience, you can't believe everything that you read out there, and there's just so much. And I was just surprised at how much erroneous reporting there was coming from national news sources, and I'm like, they know nothing about this. They know nothing about this. There's a whole different set of dynamics in a purchase or in a sale. And when I heard that, just close it and offer 30% less, I was like, you had to be joking.
Could you imagine being in the middle of a real estate transaction and calling up the listing agent? Oh, we just want 30. Yeah, we just want a $30,000 reduction.
And I had a discussion with some of my people, and part of that is you got to understand how properties get priced. Granted, 10% of the 10% of the stuff goes on the market high. We all see it all the time. They drop the price, it gets to market value, then it sells. But there's a, they're just not, sellers just not coming up with this number in their head. I mean, they're being advised by real estate brokers. We're doing calculations. We're analyzing. We're, determining where that thing's to be. So I just thought it was rather humorous, and especially coming from a nationally renowned, it's on national TV, man. And it's like, oh, yeah.
It's clout.
And I'm like,
clout.
Yeah. So, but yeah, I mean, even.
Painful.
I do wish him luck with that, though.
I'm like, give it.
I would like him to try that.
Give it a whirl. We all know how it's going to.
It's pretty hot. I can't imagine he's getting by with that.
And anybody that's been doing this for a while knows how that shakes out. I mean, okay, we're going to try, and then oh yeah, I see.
I guess I will say in the luxury markets or the super, I don't even know if that's possible, but the McMansions or whatever, maybe that's plausible. But I can't speak to that.
They did say there both. I think it was Dr. Stevens kind of predicted that there'd be a little bit of softening in that market.
In the luxury, yeah.
But no, I tell you what, if you're listening. Both those podcasts are available to listen to. We only have enough time to go to just touch on sort of the highlights. Tons of good information there. I think that the big takeaway is that there's a lot of disinformation. This stuff that we're getting to you guys is you can count on it. I mean, it's been people that are in the industry that watch the industry, kind of like what we're doing here on the local level. But the national predictions, what's nice is we're seeing what they're saying in our market, saying actually even better in a lot of cases. But with that, we have to go to our weekend update from our temperature controlled global world office of Jen. And so Jen, tell us what's been happening since last Thursday.
We had an interesting week. All right. So total on the market, Denver Metro 5787, which I don't think I've ever
total
stressed.
Inventory, right?
Yeah.
Homes available.
That's so low. That is just such a crazy low number. Not even close to where we should be, but we still have 5787. Over the weekend, which we consider sort of Thursday to Monday, new listings we had come up was 708.
708.
And we had 873 of those penned this weekend. So and that's almost double to what we had, kind of during our shutdown, which makes sense.
Well, and it was up 465 from the week before. I kind of grabbed your data and looked at it. I was like, another almost 500 properties.
Crazy.
Right?
Yeah. We closed 556. And again, our withdrawals are really going down. I think last week was really low, but 85 for this weekend that we had with.
Yeah, no.
So I don't even know if those anymore are even COVID related at this point. People withdraw for various reasons. So
right. Well,
I don't know if that number makes sense anymore.
But there was talk about the rolling start. We're seeing it looks like we had a comment come in, but it was not. But no, it's like the cars following the pace car Brian Buffini mentioned, and it's like they're getting ready to start. And I'm like, I think we got some cars squirting ahead of the pace car. I think they're just trying to, pass it on the left and going through and stuff.
You're ready to go.
Which we'll take a look at here in a second. I was like looking at, people are asking about prices and stuff. And I'm like, okay, well, we've kind of gone to 45-day closings, right? So some of the activity that would affect prices when I looked at it weren't really there. I just wanted to take a peek. So I looked at the average price, which can get affected by, you get a couple $1 million properties in there, or they're coming out of the mix. But I said, well, let's look at the median price, and that's still looking pretty healthy. I mean, even with the slowdown, right? Median price is still showing an increase. We're still got an increase over the last year. 441, 250 is median price for through year to date through April. That's pretty darn cool. The average price, and I don't have it set here, it had dropped a little bit, but I'm like, well, we haven't seen actually all the sales from April, because those probably won't be closing until mid-May. So I'm like, I don't know if we want to go with that. But the other thing too is we got that. Remember, June said we had we expect to see 1 or 2% appreciation by the end of the year, and I'm like, okay, well, look, our pendings are down, right, from last year because we were closed. So here's the takeaway: we still had 3,000 homes going to contract while we're shut down, right, in April, right. And at the same token, we're having we had a slight bump in the median average price, and so I'm like, okay, normally, lower volume, you would think, okay, lower demand, et cetera, so on, but we're still seeing what they're talking about, 10 to 15% slowdown in volume, and still seeing appreciation, which is really, really cool. And I think I had the number of closed units, right? Number of sales, right? 3,400 in April, down from 4,800 from the year before. However, we're closed,
Not bad for not being allowed to show.
Well, right, not bad, and for not being able to show.
Closings.
Yeah, exactly.
But what was really interesting, and the telling sign here, is my famous Excel graph, right? That where we track what's been happening since the shutdown, and look at this over here. So this green line is the number of new listings that were coming on the market, right? So right after we were said we're going to be opening up, look what happened, man. All of a sudden we got all this inventory, but then the blue line here is the pending sales. So anything that's coming on new is either getting gobbled up fast, but the pending activity through today is outnumbering the amount of listings coming on. So again, that's driving pressure on the inventory, right? We're still going to be a tad short on the inventory, and that's going to support, the prices. This line right here kind of deals with price decreases, but these figures here are typically what we would see, 10% of the market's coming on too high, for whatever reason. But this acceleration here, and we weren't even fully opened, right? But we crossed over again now, where there's the pendings are now going above the amount of inventory that's coming on, and so okay, we're going to see more inventory. People will change their minds, but anyway, I'm tossing to the panel for your thoughts on this, and so let's start with Jen.
Oh, I was hoping Anne. Keep going, Anne. She's been pretty quiet.
Yeah, Anne's been kind of quiet. Anne, you're up.
You're seeing pent-up demand. Listings are still lagging. There's just not the supply and demand. We're not equal yet. We're still firmly in a seller's market. Mm-hmm. And we do have the buyers. We might have a few less because of what's happening with the financing available right now. But what you're seeing is people that are still employed that can still buy, and they're exercising their right to buy. Mm-hmm. And it's pushing these pendings up, obviously, because we're seeing it. But people are not worried about any kind of housing crisis. And we're certainly not in we don't have any issues right now. We just don't. I don't know any other way to say it.
Yeah.
We don't have a problem.
There's have lost some deals. We've lost some deals due to job loss like 3 days before closing. I mean, that's absolutely happened, and it will continue to happen, unfortunately. Just too bad. Mm-hmm. But I was in a multiple offer situation this weekend, and in the $600,000 range. So, I mean, it's
now. Did you end up, without giving us the details, was it like a bidding war? Were you guys?
Yeah, we didn't win. Mm-hmm. I mean, we didn't go far enough over. So we're back to that. But
and that was what I have the close to list. Oops, maybe I do, maybe I don't. Hold on. Okay, guys, I'm messing this all up. Bear with me. Okay.
We're going to be going back to, I'm not sure we ever got out of the multiple offer situation.
Well,
there's such a demand for that entry-level housing. That demand, there's just not enough houses to fix it.
Yeah.
It's going to happen for a very long period of time. It's just going to keep the pressure on the market.
Well, and one thing
we can't fix that part though.
One thing I was putting up there was this like earlier in the spring, January, February. This is the percent of listing price to the closing price, right? 98, 99, and then March, April, May, all into the hundreds. Right now, that takes into consideration one that may have gone lower and higher, but and I don't know if the system just caps this at 100. But from what your experience, I would expect that we're back into multiple. When I see that kind of push on the pendings, and I've got several in the wings, but it's going to be, I think as we open up more, we're kind of going right back to, okay, it's tight inventory time. We got to really think about that.
And I think we all have clients that are sitting on their listings as well. I mean, there's definitely still some uncertainty out there. I have at least two that wanted to go on in April that, we're going to wait till the end of May, mid-June now. So hopefully we'll see a good increase. Our spring season is going to sort of go into that June, July, August. I just did not like my clients ever to list in July, ever. It's just a dead month. And now it's like, well, sure. I mean,
July is the new April.
Fine.
I mean, really.
For sure, all bets are off.
Yeah,
so I think we're good in terms of when we go on now. But
and we're sitting on 44% of buyers that are still waiting.
Right.
That backlog eventually is going to hit, and
well,
it's going to be interesting.
I had something else, but it brings up something else too. We had, I'm going to have to get to it here. We had taken a look at one of the 3D tour products that are coming online, which we're going to be seeing a plethora of those. And for some reason, if I take a chance on it and try to find it, well, let's see if I can just screen share.
I mean, those are definitely going to be useful tools, moving forward. Because we were talking about that. We had a whole training on this 3D product, and then we kind of opened up again. But I think these are good, useful tools that we can move into the forward.
And this was just a demo here. I've got it on screen now. But it was like, okay, it was done with an iPhone. And
no tripod.
Right.
Just handheld.
Yeah. And you're able to look through and do all that stuff. And so, it's going to become like par for the course, I would imagine.
The dog.
The dog's extra. It's under. They
comes with a house.
Yeah, 5,000 more. You get the dog. Yeah.
You can have mine for free.
You can have the dog.
Well, and there's been. It is likely going to be par for the course, and they are going to get better, and I think that that's all going to be.
Sorry, go ahead. I was just going to say there's going to be a segment of the population that are going to be leery of walking into other people's houses for quite some time. So I think these are still very valid tools and, something that we were forced to learn very quickly.
Yeah.
Which we're happy about. We're good. That's good. But.
Right. Well, and I think all of this is good. And other things, I know Pam does this and everybody, are we Skyping and screen sharing with our clients? What do you guys, I find it, I find that it's actually more time consuming because now I'm spending more time with people. But what are your thoughts, Pam?
For me, it's a game changer. Before coronavirus, we tried to always bring clients into our office, physically bring them in, meet them face to face. More so for first-time home buyers, just because people that have done this a time or two, they don't necessarily need to do this. And it's not to do the loan application. It's to do like a consultation where we go through how we, what we look at to, qualify. And then I pull rates live in front of them and I explain the numbers, and people to see these things visually just helps so much. They can ask questions in live real time, So being able to do that through Zoom and Skype now it's invaluable because people just being able to see it when you were trying to explain the difference between a credit versus a discount point, being able to see it live on rates, like they're like, oh, I get it.
I got it. Yeah, I got it. Yeah.
And then build a fee worksheet out for them and explain it line by line. It's just, it makes a huge difference for buyers and people that are refinancing, but it's a big difference. And so it's something we've been doing for, before this, but obviously been utilizing it even more so since now we can't see them in person.
Mm-hmm. Well, now, Jen, you got a couple of people that were still pushing forward through all of this. And what's your experience using the Skype and Zoom thing?
Well,
or what are their thoughts,
So most people in my realm, I've been able to pretty much stick to phone and email because that's just their preference. I'm working with a millennial heavy group, so they're fine texting. So personally, I haven't changed too much, but again, I worked a lot straight through, and the buyers that I have, we did stop obviously when we were told to, but yeah, so I haven't done a whole lot of video yet. That's not necessarily not in my toolbox, but my client preference so far has been more text and phone.
Yeah. How about you, Ann?
I found it to be a great tool. And it helps, because you can't meet in person. I prefer to meet in person just because that's how I am. But when you can, at least I can still see them on the screen. I still feel like I'm there. And I like the screen share because, I show them with a mouse, like, this is this, and sign here. And
yeah, well,
it's worked out great.
It's going to be an invaluable tool for that, for going over contracts. And I don't know why we haven't been doing this before.
I tell you, I just went through the full thing, like, first time buyer training and stepping through the contract and going through what the MLS in the portal and everything looks like. And although it took about just as long as I would have when I would go meet with them and we would step there and I'd show them the laptop. But I think that the takeaway was, if I have those meetings in person, that it kind of had that glazed over look, like I just hit them with a fire hose, but I really sensed that there was some comprehension of being able to do it this way. And I'm like, I think there's an added benefit. Like you brought that up, Pam, they like see it, they get it, right? And I show it to them and I highlight the clause. I go, yeah, remember, and this is how this is going to work. And this is why this works this way. And so I'm like, good. I still do like, meeting in person and stuff, but
I do miss that. I miss it a lot.
But at any rate, so wrapping up the market review, thought the short term look at our market, guys. What's your word on that before we go into financing land?
I think the numbers sort of speak for themselves. I don't know how much, we're strong. We're very, very strong.
Very strong. Yeah.
We're going to have another flood. It's just going to happen.
I'm already tired.
Sellers.
Yeah. Yeah.
I mean, I feel like I've worked more during the shutdown than I did before the shutdown.
Well, right.
But there's so many listings sitting waiting to go on the market, and there's a lot of buyers sitting on the sidelines.
Yeah, I'm with you there, and I'm thinking without actually predicting it, but if they're saying 1% to 2% by the end of the year, what I'm seeing is like, I think we're going to beat that.
I think so too.
I
think we're going.
Logic would dictate.
I think we're going to make up for the slowdown. I mean, if you think about it, what are we down? 2,000 units, right, from the slowdown? Because we were pretty close there in the first month. I think we're going to be able to make that up, and I think the Denver market, Denver metro area, is going to outpace what might be happening in other parts of the country.
And even when we're sitting at 7,000 units, that's still horrible inventory.
Right.
It's so low. Yeah. That's not a fun time still, even at 7,000 units.
It's like when it pops on the market, we got to have a Star Trek beam ourselves over there, Well, I guess the virtual tours might help us out a little bit, but still it's like, the physically seeing the properties, that ain't never going to go away. So, but
a number that was quoted to me, this is real quick. I mean, to have a healthy, balanced market for our population, we need 26,000 units.
Well, yeah.
26, and we haven't had that in, I don't even know how long it's been. Pre-recession.
4.
Yeah. Yeah.
You know?
So we're looking at 5,000 units when a healthy
Yeah.
market needs to be 26. And
Yeah.
that's just, I don't even see that happening ever again.
No,
but
and even where, and like my number was like when it's around 12 or 13, we're not quite balanced, but we're not quite in the frenzy.
we're not crying.
And
Yeah.
we're not,
Yeah.
we're not, yeah. So, but I would say, now the downside is that with 25,000 properties on the market.
Yeah, we actually have a days on market.
Yeah, I'm previewing 50 homes to show 10.
Exactly. Yeah.
So
that's true.
But at any rate, all of this it works because the fuel for this is financing, and Pam is on. Some poor thing's been sitting there for a while, but so you mentioned that mortgage applications. What's going on in financing land?
Well, yes. So like I mentioned, MBA, their survey said that mortgage purchase applications were up 12% for the week ending of April 24. So it's a little bit of lag in the information, but even that was a huge increase from the week before. So
12% on purchases.
On purchases. So that demand is there. And I've seen it too. I've had two contracts go under contract, or 2 purchases go under contract this past week. Like it's there, it's happening.
Now, what are you hearing from your
great.
people? Are they saying we want to get going now because of, or are you hearing any?
Yeah, the ones that are ready to go, they're ready to go right now. Most of them, as soon as they're like contacting me, they wanted to move forward.
Yeah. Did they tell you why? I mean, like, we want to, or I'm just tired of being cooped up.
I'm guessing they have been watching the markets, but most of the time they've had to work on something personally in the back first before they were able to move forward. But so they were moving quickly, but pre-qualified, looking, bought a home.
Yeah, so they want to go buy a home. They don't want to just see or kind of wait around. They want to get going.
And I think that's just going to increase here. I do have others that we haven't finished the pre-qualification process because they're waiting, but that is due to just wanting the market to be in a better place. Rates are great. 3.25 is what about Freddie Mac is quoting right now for a 30-year. Of course, 3.25 with about 0.7 basis points in fees, but that's kind of normal. So great rates. Unfortunately, there are loan products, obviously, that are suspended right now. Jumbos and non-QM are still kind of out there, not available. High balance is even starting to disappear right now. You can still get one, but that's up to $575,000, just so you know what high balance is. 510 to 575. You can still find them, but for a huge discount fee right now. So those are, starting to disappear. Credit has tightened up. Lenders are asking for higher FICO scores now and want some reserves or, but the biggest thing I think that is my biggest concern is employment. We saw that unemployment jobless claims reached over 30 million last week. So that's also the lender's biggest concern, is doing multiple checks of employment to make sure these borrowers are still employed. And I do my due diligence. I ask them, I try to understand what line of work they're in. I try to understand, are they hourly? Are they salary? How, has their time been reduced? Because that all will impact whether they qualify or not, because lenders will find out.
Yeah. Well, just judging from what we saw in the market activity, there's a lot of, it seems like there's still plenty of people. And we are very sorry that there are people that are impacted, but the market's showing that there are some people that are still going forward.
So. Self-employed borrowers, that's a little harder right now too. Lenders are being very conservative, I guess, in their qualification of them. They're asking for quite a bit to try to determine that they're actually still in business and still, bringing in income. Some are still, tacking on loan level price adjustments it's crazy. Like
we're used to being the last ones in.
I know, but this is even more so now.
Well, the thing is, they're still making loans. I had, there was like a back in the day, man, like a 3-point difference if you could get a loan being
Oh,
self-employed.
right, yeah.
It's
Oh, it was
always been
ugly.
a hurdle, you know?
So that's kind of the state of the market, but we're still cruising. Like, we are busy. I mean, and a lot of that right now is refinance. But the purchases, we've all seen them come back, they're coming back, and we know it's coming. That's the thing, is we've had so many people reaching out that are getting ready to want to look or purchase, or, just wondering what the pre-qualification process looks like. That demand has risen as well. So it's coming.
Yeah.
Like you all have said, it's there. The surge is coming. It's a delayed spring market. It's going to come in the summer,
Yeah, right.
but it's coming.
Well, and I know that question came up. Somebody was, okay, so once a buyer goes under contract, and they've got financing, do the terms just constantly change right up to the end, or what are you seeing?
Once you're locked in, you're generally grandfathered into whatever the pre-qualifications were at the time for that loan product. The biggest thing that I see that throws something off is unemployment. Now, that being said, when the jumbos did fall away, there were a few loans in our business company that were just canceled because the jumbo product was pulled from being offered. I haven't seen that with any of the conventional or FHA or VA. If it's gone away, it's more been because all of a sudden the borrower is unemployed or cut to half-time and they no longer qualify. It's not because of the other guidelines changing on them. Those stay.
Are bridge loans still floating around? We haven't talked about those in a little bit. Are they still?
I saw one the other day.
Okay.
But they didn't actually need DTI qualification, which I thought was weird.
Oh, that sounds tricky.
Yeah, it does to me too. I didn't look too much into it, but
Yeah, I don't do those. I have to refer those out to banks,
Which is
and I'm guessing if they offer them, they're probably,
pretty tight.
yeah. And a lot of HELOCs are being pulled. One of our biggest HELOC offers they still do it, but they won't do it through us anymore. We have to send the client directly to them. We can't.
We saw that
help
one
with
coming.
it.
We knew that.
Yeah, we talked about that. Yep, we sure did.
Okay, sorry. I interrupted.
No, this is all good.
But as soon, there is some, I see a move towards lightening some of the loan products and returning of some of the loan products. I'm starting to see a little bit. So it's enough that as soon as this kind of opens up, we're going to see a lot of buyers coming back in the market.
Yeah.
What about the FHA VA market? Are you still paying points to get those reserves, or is that rolling back a little bit, or how are we doing there?
It's lender specific. Some lenders are still requiring reserves and have different pricing. I did just lock a VA last week at 3.125 with a
nice,
not a very big discount fee at all. Doesn't have to have reserves. So it's lender specific. But yes, you are right.
That's plausible.
Some of the lenders are pulling back, and removing some of those overlays or opening back up some of their loan products. It's just some lenders are, some lenders aren't.
Well, and
at least it's plausible.
That's
now,
the joy of being a broker, is I have the options there.
I mean, at the beginning of April, you couldn't get. You could get an FHA VA, but it cost you big bucks. It defeated the purpose. So it's nice to see that at least it's plausible now if you need the product.
Well,
so that's good.
And I think that's a really good sign that there's going to be a future of financing, right? And and instead of being, okay, we're just cutting everything off until it's like, it seems to me that in financing world, they're just kind of remolding, reshaping, regrouping, and still with the idea that they're going to service. Unlike, is that what you're seeing, Pam? Is you getting new stuff coming in?
It's ebb and flowing. They're watching the markets just as much as we are. They're watching the news, trying to figure out, and the biggest part of this is what the FHFA has done and how they're impacting the credit market. And I think what they've done did the job, but it has some big unintended consequences that has tightened the credit world. And so the lenders are watching those things and adjusting as new announcements come out. And so like the cash out refinances, almost non-existent right now. Things like that, like just because the GSEs are saying they won't buy those if they go into forbearance. And so the lenders can't take that risk by even doing them. So they're not offering them or at a huge discount. So it's just watching everything and, staying up to date and knowing what my clients are, if they're on the line, and just paying attention to what loan product they're at and, keeping them apprised of if they're going to fall out of qualification or not.
I feel like if there's no other takeaway from this entire thing, that's it, is that there is still lending. It's not just no across the board, right? So like we're not in recession time, because it went from free for all to nope. If you don't have 20% down, you can't get anything. And that's not where we're at. Yeah, of course they're tightening up products, but those products make sense to tighten up.
Sure.
So, not doing a cash out refi preserves your equity, preserve your equity. So I think that that's a very good indicator that we're not crashing, because a lot of people still feel that way, no matter how many times we sit here and say it. I think that's a really good indication that we're not, they're still lending.
It just appears that the maneuvers that they're doing, right, appear to be, they maybe learned their lesson back in, after Countrywide went down. And I had, 4 deals go up in flames, right? But even so, if it was like a wide open valve, we were already having trouble finding enough homes for the people as it is. So, if people got to delay a little bit, that may help, existing sellers and buyers. But
these are smart tightenings. Some of those were crazy back in 2008. These make sense. At least I can wrap my head around what they're doing now.
Right.
Yeah, the reazoning.
Good reasoning. Yeah. So anyway, we're in good shape.
Mm-hmm.
That was the way of saying that.
Well, we're kind of coming up to time here and about ready for our weekly memes. But I'm trying to look over. I don't know what the heck we forgot to talk about. I'm sure there is something or two. And if there is, and there's a question you guys had out there, reach out to any of us.
We kind of bounced around as always, but I think we got it. I think we captured it.
Yeah. Yeah, we never did. We had talked about, the number of homes that are in forbearance versus the number of households. But I have a feeling, again, I don't know how, I'm sure it's relevant, but I have a hunch, and at least what I'm hearing, that a lot of these households will be coming out of forbearance. I don't think the translation is forbearance foreclosure, and
it doesn't translate. And the number this week was like 7.54% of all mortgages are in forbearance.
Mm-hmm.
That's only up a little bit from last week.
Yeah, it went up but not much.
Huge increase. And last week I read that number is going to double. We're going to hit 15%. We're not actually sure that that's going to happen. That they might have to revise those numbers down.
Yeah.
So I think it's actually going to end up being better than what they initially thought.
Which even goes to 15%.
And a lot of states are turning north.
You got 85% that are still current and still doing their thing. So yeah. Rock on. Well,
and our weekly reminder: if you can roll yourself out of forbearance, do it. If you have the ability to, don't just keep putting it off because you can.
Yeah.
Just don't dig yourself into a deeper hole. So that's our weekly preach on that.
Weekly preach.
Yeah.
Yeah. But
it's not free money.
Wrapping up on the thing, it looks like financing is still there, right? There's obviously a demand on the market, so the people out there buying ain't stupid, right? Housing looks like it's secure. The near term looks secure and as a long term hedge against inflation. So there's a lot of good things driving this. And I got to tell you, having Ann and Jen and we on the real estate side have all gone through this. I am so glad we are not looking at what we were looking at, 2006 to up through and riding that crash all the way down. I just am very, there's a lot of good things for people.
Yeah, that was fun.
Yeah. And, and if any of you out there have any thoughts or concerns, and if we missed a comment or something, please reach out to any of us here. can get your questions. We're just staying. We're it's a daily routine to kind of stay on top of what's happening here, and so we can give you, we can kind of straighten out some misinformation you might be getting. I remember in the days, and we'll just wrap this up before I go to the memes, but it seemed like I had 90% of my job was, well, no, there was a big chunk of my job that was like to clear up the disinformation that came from an unnamed local paper, and the paper would come out. There's the article, and then I'd spend the next 2 days just kind of like disproving what they said,
talking everybody back off.
and now it's just not the paper, man. It's like we got the internet, we got all this stuff, but we are, and those Buffini podcasts, please listen to them because they are full of the real information that you guys need if you're thinking of buying, selling, moving, relocating, or just concerned about your investment, your home. But with that, it kind of brings us to meme time. First one here. One of the nice things is gas is under $1 and all the restaurants are drive-in and everybody has shaggy hair. Welcome to the 70s. And then I think Ann found this one for me. Whatever happens, don't go to 2020. Although
don't let it get locked on that.
And then this one here, Monopoly suspends rent on all properties and bumps up passing go to $1,200. And I'm like,
I actually haven't seen that one. How have I missed that one? That was a good one. Free.
Yeah.
No.
So, well, good, man.
Right.
Well, yeah, I think unless anybody wants to get a last minute comment in, I think we're about ready to hit the button. Anything you guys have some last words?
No, call us if you need us. There's a lot
here.
going on. Yeah.
Rock on.
And I'm still going with the go buy because your competition's still on the sidelines.
Well,
A little bit.
and they've been saying
Some
that.
of them, not all of them.
Some of them. You might only have 5 offers versus 10 or 15.
Well,
so it'll be easier to compete now than it will be in another month.
and that's a thing. I mean, you get into the, you're competing against 10 people and there's 45 people lined out to show the property. I mean, it just, it gets brutal on the buyers. I mean,
with no overlapping showings allowed anymore, I can only imagine the lines. It's going to be interesting.
I've got a showing set up. It's at 3:45 in the morning. Stay up all night if you want. But
it's the only available time.
We got 3:45 in the morning.
Oh dear, that part's going to be interesting. Yeah. But it's for the greater good, of course.
Yeah.
So.
All right.
Well, thank you all. Appreciate it.
Thank you all.
Thanks, everybody. We'll see you next week. All right.
Bye.
Thanks for tuning in.